We have a contrarian point of view here. We think the bigger risk in the next 1 to 3 years is deflation, not inflation. And it's both good and bad deflation. We're already seeing cyclical deflation in the pipeline. We've got commodity prices down 30, 40, 50, even oil, 30, 40, 50, 60, 80%. And it's because China's in recession, Europe's effectively in recession, and we think the US is in recession. So you've got deflation coming in the pipeline, and we have a massive inventory buildup that is actually shocking. Nike, for its recent quarter, reported that its sales were up 3% and its inventories were up 44%. In North America, its inventories were up 68%, and the inventory in transit is up 85%. This is going to overwhelm retailers, and the only way they'll clear their shelves is to discount aggressively. We're already hearing Walmart, Target, and others talking about discounting. We think cyclically we've got deflation, and then secularly, meaning longer term, we believe we have deflation because of innovation. Now that's good deflation. You cut the price of something, units will increase. So we think we're going to see some booms in categories of innovation. But at the same time, if we're right on that, there are a lot of products in the old world that are going to be obsolete, and they'll have to cut prices. That's bad deflation. So we see deflation, frankly, all over the place. And the Fed right now is looking at two lagging indicators. It's looking at CPI inflation, and I just told you what's in the pipeline, and it's looking at employment.
Hello and welcome to Money Talks. In today's video, Cathie Wood, the founder, CEO, and CIO of ARK Invest, discusses about the investments in disruptive technologies, the importance of research for investment, deflationary signals, Fed's uncertain decisions, and the bullish forecast of ARK Invest for the most traded cryptocurrency, Bitcoin. Make sure to stick around till the end of this video where Cathie Wood reveals her take on disruptive world order and why she believes the Fed will ultimately pivot.
One of the reasons I've been drawn to innovation is actually a great leveler. We have never seen the amount of innovation that is taking place now. There's an absolute explosion of it. The seeds for all of it were planted in the 20 years that ended in the tech and telecom bubble, but the technologies weren't ready for what we're talking about now. AI breakthroughs really didn't start happening until 2012, well after 2000. And even cloud computing didn't happen until AWS, Amazon Web Services, in 2006. We're seeing 5 major innovation platforms: genomic sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. They involve 14 different technologies, and we believe they're moving into exponential growth trajectory. So what we say to our companies and to our clients is get on the right side of change. There is so much happening now. It is the great leveler. But if you don't get on the right side of change, you're going to be left in a disrupted world order. Sure, there are risks in innovation, but there are risks in not being there. And we think those risks are growing by the day.
Cathie also highlights her perspective on the macroeconomic situation going on and the chances of a recession in U.S. and around the world. Wood shared that she bought $100,000 worth of Bitcoin in 2015 and that is currently worth about $7.6 million.
Yeah, and I'll echo, and I say all the time, innovation solves problems. Innovation solves problems, and we have a lot of problems. And actually, innovation gains more traction during tough times because consumers and businesses, if they're afraid, they're willing to change the way they behave. There's a lot of inertia in human behavior, and they're willing to change. In terms of an unmet need, that's why I founded ARK. I saw the traditional asset management world focused on public equities going passive. And at the same time, we saw this explosion of innovation. You know, the seeds were planted a long time ago. The technologies are ready now. The costs are low enough. It's just so ironic that because of what happened in the tech and telecom bust, people won't go near a lot of innovation these days. That's a good thing. That's a good thing from a portfolio manager's point of view. I know we are not in a hype phase, but I do feel the unmet need that we are filling is innovation as a special asset category because benchmarks and passive are all based on backward-looking indicators. The stocks in those portfolios are there because of their past success. If we're right, and these 5 major platforms, which involve 14 different technologies, are going to disturb, if not destroy, the traditional world order, if we are right, then it is imperative that investors have, I would say, a very good allocation to innovation, however one wants to define it, to innovation, so that they're looking at the future and, riding the coattails of these new technologies and these exponential growth trajectories that we believe are going to be transformative for the world.
Cathie Wood seems quite confident over her saying that she added, "My background is both in economics and finance, so I feel very confident in what I'm saying. This is the first global private, meaning no government oversight, digital rules-based monetary system. When I'm explaining it like that, I ask everyone to listen to each of those words. Each one of them is very important. This is one of the most profound innovations of our time."
The return profile, again, this is similar to our public funds, but the return expectation is higher. We have a 5-year investment time horizon generally. I shouldn't say generally, always 5 years plus. The return expectation is somewhere in the 20 to 25% per year range. Now, for our ETFs in the public equity markets, these are more mature companies, that number is 15%. So again, this is just filling out a space that is where we should rightly be because we are so exclusively focused on disruptive innovation.
ARK Invest followed a bullish outlook for Bitcoin's valuation in the starting of this year by doubling down in their forecast a couple of weeks ago, as the firm is expecting a $1 million per coin valuation in the upcoming years.
And employment, I think what's happened there recently, companies had so much trouble hiring during COVID that they have decided to hoard labor. And even though business is kind of fraying at the edges, they're keeping their employees because they don't want to go through that again. If we're right on what this inventory glut is going to do to margins, we're probably going to see some deterioration in employment as well. So the Fed will pivot. We just saw a liquidity crisis in the UK. Pension funds, because the increase in interest rates has been so rapid, led by the Fed, pension funds were offsides in terms of their derivatives. And there was a run, margin calls. This has happened just recently. And that is a sign that there's a liquidity crisis brewing out there because interest rates have moved up too fast. We think the Fed is now making a mistake.
Earlier this month in an interview with Bloomberg, Cathie Wood's ARK Invest mentioned Bitcoin is an arms race against traditional finance and asset classes. Moreover, the firm looks confident of Bitcoin's ability to be at the heart of a revolution in money that had its multiple use cases. So, do you agree with Cathie Wood's take on disruptive world order? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.